Hi, Colum. Thanks a million for taking the time out there to join us on our series of panel expert interviews. First of all, for the benefit of the audience, would you like to give us a brief introduction to Guardian?
Sure, and thanks for inviting me to do this talk, Steph. Guardian Management Accounting is a specialist outsourced accounting practice. I formed it 25 years ago in May. Today, there's 17 people here in the team, a mix of accountants and bookkeepers and tax advisors. So what we do here is the basics of payroll, VAT returns, year-end accounts, and monthly management accounts, which is really our specialist area. I'm delighted to say that Pimbrook have been a client of ours now for the last 15 odd years, and we've worked closely with them, and indeed we have used Sage in the majority of our clients, and have recently migrated the bulk of our clients to Sage Cloud One, which is working really, really well for us and helping us become much more efficient. And we're passing those savings on to our clients as well, who just find the product really easy to work.
Great, that's wonderful. Colum, as you know, we do the Sage accounts and payroll there, but one, I suppose, main topic of conversation at the moment is the July stimulus that has come out. Is there any chance you could give us a few headlines that will help our client base there to know what to investigate maybe a bit further with the likes of yourself?
Sure, okay. Firstly, I have to compliment the government and the revenue commissioners in relation to how they've handled the COVID-19 support schemes. They were very, very quick to act. And yes, of course, there were some errors and teething problems, but in my opinion, they achieved what they set out to do, which was to keep money in people's pockets, try and keep the economy going. So we started with the biggest thing. The biggest thing was the wage subsidy scheme, which is a tremendous success and has really, really helped an awful lot of our employers. Employers were receiving a subsidy of between 410 and 350 euros for their employees and passing that on, which made the cost of employment much less. However, in the next few weeks, that will reduce, and that will reduce to 203 euros or 151 euros 50. They're now calling it, instead of the TWSS, it's the EWSS. Minor change, but just to distinguish between. So the new scheme will apply to employees who earn between 7,878 and 76,024. So again, it will capture the bulk of employees for most of our clients. In order to qualify for the EWSS, there is a change. Previously, your sales had to be down 25%. Now that criteria is down 30%. So it just is trying to acknowledge they expect that a number of clients are back up and businesses are back up in trading, and therefore they don't need as much support. And indeed, if your sales, excuse me, have improved, that you can actually, you may not need the support there. That's why they brought the 30% reduction in.
Right, okay, well that's certainly a big change, and I presume these are for companies that are ready to, that have maybe collapsed as such. Okay, and next one there, Colum, if you have another idea.
Okay, the second most utilized support during this time was the pandemic unemployment scheme for people who were let go, whose employers could not keep them on. So in the past, a person could receive up to 350 euros per week. That is now reduced to 300 euros per week, but the scheme is extended to the 1st of April 2021. So again, it's of great comfort. However, they have made a correction, which again, in my opinion, is totally valid to do. It's going to be based, the amount you receive is going to be based on your average net earnings. So for people who were earning between 200 and 300 euros, prior to the pandemic, they will now receive 250 euros, which is obviously down 100 euros per week. But again, I think it's correct. Part-time workers who were previously only earning 150, 125 quid, they were getting 350. It was madness. So now they will be tailored. And indeed, those who earned less than 200 euros will now only receive 203 euros per week. So that's a correction of that scheme. There will be further changes announced to this scheme in February 2021. And the scheme will end in April 2021. All these end dates are contingent on what is going to happen with COVID and how the economy is reacting. You're just putting in dates so that people are aware they're not there.
I suppose they are, as they've said all the way along with the roadmap and things like that, they are subject to change. But I think what they are trying to do, and I agree with you, they're doing a little bit of realignment, setting people back to where they were, but certainly keeping a number of those supports in place for employers and employees.
Sure, absolutely. And look, in relation to employers, which is both, I think, your clients and your market there, there's something there that so far in our experience, only maybe 50–60% of our clients have availed of, and that's the business continuity voucher. Essentially, that's a rebate on rates, commercial rates paid in 2019. The original scheme, when it was introduced, allowed you to reclaim up to €10,000 or a minimum of €2,000 on your rates for 2019. So what does that mean? If you're a small business and it paid €500 rates, by filling in a form online, which took me about 15 minutes to do, even though you'd only paid 500 quid in 2019, you actually got €2,000 back. And a lot of our clients with retail shops who had paid 12 and 15,000 euros rates, they got 10,000 euros of a rebate back. From the time I personally processed Guardian's application, it took 2 weeks for the money to hit my bank account. And it was fantastic.
Right. Well, I think the single most important word there is going to be cash flowing for a business, isn't it? Really, to
it is
absolutely getting money back.
Sure, but to then mention what has happened in the July stimulus package, the government have actually increased the limits from 10,000 euros to 25,000 euros, and again the minimum amount from 2,000 to 4,000. So in my case, I've already received 4,500, so I can't get any more. But I was just on a call earlier on with clients who have large retail premises in town. They had already received the maximum that they could of 10,000 euros, but in actual fact, their rate bills are 22 grand per location. So they're going to apply for an additional 12,000 euros per location. So it's a fantastic thing, and that's hard cash into your bank account. But in addition to that, as part of this rates rebate, the government had announced a waiver on rates for Q2, essentially, of 2019, for April to June, but now they've extended that for Q3 from July to September. So if anyone's paying their rates by standing order, please stop paying your rates. And it's not that you're going to have to pay it in future. This is a total write-off of rates for 2020 for 6 months. So that's another significant, both in your overheads will reduce, but secondly, your cash flow will not be under as much pressure. That's a fantastic.
Well, people, certainly businesses are looking down the line and looking at what their monthly outgoings are. I'm worried that they're going to be able to sustain those. Any little bit that they can take off that is going to be a relief, I'm sure, for them. Colum, it seems like if our clients want to contact you directly, because it sounds like you have a wealth of information there to save businesses, and I think it would be foolish not to have a look at them. As you said yourself, you've qualified for them yourselves, so it's open to everybody from what sounded like you said there.
Absolutely, absolutely. So look, what a tax clearance cert is needed, but again, the revenue, you may be aware, have warehouse tax debts that you need not pay any tax, PAYE or VAT, for 12 months from the time you reopen. So we have some clients who reopened in July, and they may owe 60, 70 grand in tax debts, and they need a tax clearance cert to get this rates rebate. So it was rejected initially on Ross, but we just emailed Ross on our client's behalf, told them we're availing of the warehousing of tax debts, and the tax clearance cert issued immediately after that. So if people want assistance with this, hop onto our website, guardianaccountants.ie, or just contact myself here in Guardian, and we'd be delighted to help you on that. Because some people, it's not their cup of tea, so we can help you through it. That's what we're here for.
Well, I think that's a very important final message there, Colum, that people not to give up. Really what they need is an expert on their side to guide them through these next phases. And again, as I say, it sounds like there's a lot more still in that July stimulus that you could go through with people and see where they qualify.
Good. Well, look, let me throw out one other thing set before we go. And this is around sole traders. A number of people are still trading as sole traders. And it's a small piece of the July stimulus, and some people overlooked it. Essentially what it's saying, sole traders make tax during October and November each year based on the previous year's profits. Take a sole trader made 50 grand last year and will pay tax just make it 50% tax, 25 grand on that normally in October. The government have announced in the small print that you can actually estimate your losses for 2020 now and carry those losses back against your 2019 income. So take the guy who made 50 grand in 2019, now expects to lose 10 grand in 2020. He can carry the 10 grand back off his 50 grand, reduce his taxable income to 40 grand, therefore save tax. That's something that was very small, hasn't been publicized by the media at all, yet it's very important for a number of sole traders. So that's something to watch.
Well, again, that is absolutely significant on those small businesses, particularly that were impacted immediately. Well, I've no doubt there that you will get plenty more inquiries from this one here that are going to help businesses. And listen, Colum, thank you very much again.
More than welcome. Thanks very much, Steph. Bye-bye.
Bye.